Welcome to Libertex. In this gold price analysis for March, a lot has happened since the start of the month. Gold has just completed a reversal out of a bearish trend, and traders of the yellow metal are jumping for joy because when gold gets ignited, it flies. The new year has been mostly disappointing for those trading gold, and a bearish pattern of sideways and downtrending price action continued despite record gains for some of the other metals like silver, copper, and palladium. We'll be going over whether we have experienced the bottom for gold prices and whether gold can look forward to an epic comeback. Make sure to stay until the end of the video for the gold technical analysis to get a read on the next support and resistance levels gold is likely to face if the rebound holds. And if you'd like to support more content about gold updates, as well as other metals, top stocks, cryptocurrencies, forex pairs, and more, make sure to like this video and subscribe to our channel to join our growing community of traders and investors. So without further ado, let's talk gold. Kicking off the week of March 15th, gold has shown the world it is still very much alive. After trading to the downside and shedding about 15% in value since the start of the year, gold may be overdue for a rally. After plummeting to lows in the 1680 area, gold bounced off some support and has made a defiant push upwards nearly 3% to the mid 1720 range, where it can now test resistance to break the bearish cycle of trading gold has been experiencing. A lot is going on in the overall market to rally in support for the yellow metal, especially in regards to the newly passed $1.9 trillion stimulus bill that has many concerned about inflation that will likely accelerate as a result. The trend since the new administration shows a great increase in the amount of money being printed, and the national debt is rising with it. Some analysts are predicting that the debt could climb to over $70 trillion within 4 years, which is double where it sits currently. If this were to happen, gold should see a massive increase in value, and traders of the metal, new and old, are starting to question if now is the right time to get in to establish a long position, especially if there is strong support below $1,700. Furthermore, prices for the US dollar slumped a bit following the stimulus approval, and currently the consensus amongst many traders is that inflation will rise by an average of around 2.5% over the next 5 years. If that figure is closer to 3% or beyond 3% in reality, gold is a likely candidate for a raise. When inflation rises, the price of gold usually rises as well, as investors and traders pull their money out of the market and store it into safe haven assets, and gold is the primary asset that comes to mind when it comes to safe haven investing options. In addition to the effect that the stimulus will bring, there are a good amount of traders and investors that believe the stock market is still due for a massive correction, and that what we saw in the past weeks was only a taste. If the stock market does experience another heavy pullback, or if a crash looms in the near to distant future, many will pull their money and look to gold as a safer alternative to protect their assets. These fears could rise and prompt more retail traders and institutions to hedge their investments with greater exposure to gold, especially if gold is now on its way towards a corrective and bullish course. Let's take a closer look at the technical chart for gold to see how it has been trading recently and what resistance and support levels gold will need to test to make a further break to the upside. Alright, so we are now in the Libertex terminal looking at the price chart for gold, and gold has been really trending to the downside until very recently. The bounce at around the 1673 level of support gave us a nice move back into potential bull territory, and gold is looking to retest resistance at 1733 to slowly but surely climb out of this trend. In order for a continuation of this trend, gold will need to prove its strength over this 1733 level of resistance, and gold still has a bit of a journey ahead of it if it is to recover the territory it lost over the last 2 months. But the move is promising nonetheless. Moving past the 1733 level, if gold can keep pushing past and go beyond the 1738 and 1739 range, the next level of resistance can be found right around 1744, which could be a real catalyst to revive gold and call it a comeback, with the next significant level of resistance over 40 points beyond it at 1787. From here, we could be looking for a trend reversal to the upside right around 1815. As far as support goes, traders will have to watch for the 1711 and 1705 levels. as dips, especially below the 1705 level, will indicate a higher share of sellers in the gold market. If the new trend does reverse and these levels are broken, a worst case scenario for the short term would be a fall back to support at 1673. What are your thoughts on how gold is currently trading? Let us know how you'll be trading gold in the comments below, whether you're looking for a swing trade in the short term or are holding out for the long term, along with your thoughts on gold prices to join the conversation with our analysts. If you're interested in trading gold to get in on the recent price action, or upgrading to a better brokerage, we'd love to have you check us out by creating a free trading account at Libertex.com or via the links in the description. With Libertex, you can easily open up trades for gold, silver, and other metals, as well as the top cryptocurrencies, stocks, forex pairs, and more. We wish you a great rest of March in the markets and look forward to seeing you next time.